Hi there, Shingra here again with another update on portfolio performance over the past week. On a 1 week basis, 5 out of 10 of our CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 1 returning 1.55% up to CBAM 5 returning 3.09%, in what we saw as a relatively risk-on week after a couple of interesting central bank decisions. Firstly, the FTSE 250 really seeing a return in terms of market cap style there, with a bit more return from the mid-cap equity space, which had been lagging the large cap space on a year-to-date basis, returning 5.93%, and then also seeing that S&P 500 position up again risk on week 5.79%, and then finally European stocks also rallying 5.14%. But really everywhere you looked around the board, most developed market equity markets were up more than 3% on the week, and we did see a bit of a retreat there in terms of dollar performance, down 1.85% versus sterling on the same week basis. In terms of detractors from performance, Columbia Threadneedle and MSCI China both down more than 70 basis points, alongside Hypnosis Investment Songs Trust down 82 basis points after making that decision to discontinue payment of their dividends for the rest of the financial year, and investors having that reaction of the stock retreating about 80 basis points. But what's been interesting here in terms of the central bank decisions on the past week from the Bank of Japan, the Bank of England and the US Federal Reserve all making the decision to pause their interest rate hiking cycle and leave their base rates unchanged, and that being taken as a strong positive signal for the markets, and that would also see Chinese growth equity positions through Baillie Gifford up 80 basis points as well on the 1 week basis. On a quarter-to-date basis, we do still continue to see headwinds for our high-risk portfolios, with the CBAM 4 position down 1.18% rather, and then the CBAM 1 V2 position up 0.27%. And then in terms of positive contributors on a quarter-to-date basis, European government bonds seeing a bit of respite after a sharp hiking cycle from the European Central Bank, and investors really betting on a bit of a pause there from the ECB, with some weakening data coming from the Euro area economy. That would see government bonds up 1.71% for Euro government bonds. And then we did see S&P 500 hedged positions up 1.56%, but then in the same breath here we did see dollar retracting 1.35%, which would be a tailwind for our hedged US equity position, which was up 1.56% on the quarter-to-date basis. And we continue to observe some robust performance from emerging market debt through the M&G Global Emerging Market Bond position, up 1.38%, as central banks around emerging markets are not as indebted, rather governments are not as indebted, and also central banks had a first move advantage in terms of interest rate hikes and not being perceived running the risk of further rate hikes as well. On the 26th of October, the Hypnosis Investment Songs Trust had its annual general meeting, where there was a vote to discontinue the fund and absolve the board of directors. And also recently the fund has declared that won't be paying any dividends for the rest of the financial year, on the basis of wanting to maintain a covenant in terms of interest rate coverage that it has on its rolling credit facility, and that would see that strong derating of the position down 9.6%, alongside more interest rate sensitive positions in LNG Global Thematic down 4.56%. And finally, we continue to see that China story playing out in terms of the property market woes, and waiting for that fiscal stimulus from Beijing, which would see Baillie Gifford retracting 3.2% on a quarter-to-date basis. But looking at this week, at the front end of the week, we got some household spending coming out of Japan, weaker than expected. From China, we saw a deterioration in the trade balance, where the Chinese population imported more than they exported, and that would see that trade balance weakening. And also we do continue to see that deflationary story playing out with negative year-on-year inflation readings by CPI coming out of China as well. And then the US trade balance deteriorating similarly to China, but the story here has been both imports and exports have moved in the same positive direction. Jobless claims down from last week's reading, but also above expectations, which would see US markets moving relatively sideways. And on a week-to-date basis, Chinese equity markets have been relatively robust. We've also seen emerging market equities relatively robust on the week, despite, as I mentioned earlier, some drawdown in Japanese equity markets and EU equity markets moving down slightly as well.